Hi, everyone. I want to thank KeyBank for coming to teach us and understanding your credit report class. We have Micah, Oscar, and Stephanie with us today. So I'm going to let them take it away. Thank you guys so much.
Thank you. We're so glad to be here. A little cold outside today, so glad to be inside, nice and cozy, talking to you guys about credit score. This is our most popular presentation that people ask about, due to people just are wanting to always improve their credit score, know what goes into their credit score, and ultimately, financial wellness really starts with credit. How are we going to be able to be ready to buy a home, buy a car, get better interest rates? It all starts with your credit score. So this is a big foundation piece to what we call at KeyBank financial wellness. Financial wellness is what we harp on and we're proud of at Key. Each one of our customers, we do what we call financial wellness reviews, and we'll talk about that a little bit later. But with every single client, we are very focused on educating, because we're just not taught this in schools. Just to tell you a little bit about myself, my parents grew up paycheck to paycheck. I didn't learn anything about, financial wellness or how to create a budget, how to save when I was growing up. It wasn't until I was in my 20s that I learned, how to actually, where's my money going every single month? What am I doing for retirement? Hard questions that some people avoid asking themselves because it can be difficult to deal with, to try to figure that out. And sometimes we need help to deal with that. So that's why we're glad to be here today, to be able to help you guys to understand today's topic of credit. So my partner in crime, Oscar, best friend, coworker, both in one. We like to tackle these presentations together if possible. But we're going to go in and just talk about who we are and what we do real quick. We also have our financial wellness consultant, Stephanie Archer, on the line, and we'll talk a little bit about her as well. But my name's Micah McCartney. I have been in retail banking over 13 years now. Branch manager, assistant manager, banker, you name it, I've done it in retail banking for 13 years. So glad to be here today to be able to talk more about financial wellness and educate. But with that, I'll give it over to, and I've been at KeyBank a little over 2 years now. Sorry, forgot to mention that part. But Oscar, could you tell us a little bit about yourself?
Sure, thank you for that. My name is Oscar Olguin. I've been in the finance industry for over 10 years now. So obviously you guys have a lot of experience in front of you. We want to just thank you guys for inviting us. We love partnering this way. Teaching and education in regards to finances is obviously huge. It's really, really important. Me and Micah have similar backgrounds. Growing up, we didn't have that education. I was born in Mexico. That's where our family's from. I've been in Colorado for over 30 years, but very similar. My mom, my grandma, everybody kind of lived paycheck to paycheck. Even now, she's getting ready to retire, and her retirement does not look good. And that's okay. Our culture, our traditions is, come live with me, and that's fine. We're going to take care of her. We love her. My grandma, she lives with my uncle for a year. She lives with my mom for a year, which is fine. But to be honest with you, I wanted to break that cycle for my daughter. My daughter's 4 years old. And I decided, hey, I don't want this for her. I don't want to be a burden for her when I get older. So it starts with making changes. And that's one of the things that I like to talk about, because the changes start today. A lot of people do live paycheck to paycheck, but you got to find out where your money's going. You have to set up a budget, and you have to make the changes to live a better future. As you can tell, we're very passionate about what we do. And we love teaching these classes, because the more people that we can impact, the better, it's going to sound corny, but the better the world is going to be. If you can take this nugget and, spread it with other people, you're recording it, how much more people are going to look at this recording, get impacted, right? So it's just a trend that is going to continue to go forward. That's my 2 cents in regards to this, but credit is one of my favorite classes to teach, because it's a solid foundation of where changes start to begin. And as you guys know, credit starts as young as 18. So imagine getting this education at 16, 17. Now you have a roadmap to be successful as soon as you turn 18. So that's my 2 cents. And, you know, again, thank you guys for being here. And I'll hand it off to Stephanie to tell you guys a little bit about herself.
Thanks, Oscar. Hi, everybody. I'm Stephanie. I'm a personal banker at KeyBank. I've been with KeyBank for 3.5 years now. Prior to that, approximately 28 years ago, I was in banking, and I was branch manager for several years, but then I took a position as a financial fraud investigator. Little hiatus of 20 years, but I came back to banking 3.5 years ago with Key, and I'm enjoying it a lot. And I just love this program, and most excited about teaming up with Oscar and Micah to do the training sessions. I don't think there's been one that I haven't also learned from, even though looks like I'm the old one of the group. And I'm here to help with any concerns you might have with your finances and walk you through our financial wellness reviews or open accounts. That's what my position is here. Thanks, guys.
Awesome. Awesome. Thanks so much, Stephanie. We appreciate it. So without further ado, let's jump right in. Financial wellness, we keep tossing that around. What is financial wellness? These are a lot of the different classes that we teach through. This is the Key at Work program. So I'm the Key at Work account manager. Oscar's the Key at Work relationship manager. We both work in tandem to create this program for the whole state of Colorado. We help service 57 branches that work alongside us to implement this program. So me and Oscar are just ecstatic to be with you guys at Bayaud today. But these are some of the other topics that we talk about when we talk about financial wellness. Just to have some fun, get in some engagement so you guys can loosen up, have fun, relax, enjoy. Let's learn together and have fun while we do it. What would you guys say the average American has in their savings account? You can come off mute, you could type it in the chat, you could put in whatever you think. What do you think the average American has in their savings account?
600.
600, good guess.
I was going to say 2,000.
2,000?
I just opened it. Haven't had it.
Yeah. Do you have a guess, Malaya? No.
Okay, good guesses, great guesses. So Forbes magazine in 2019, this was before the coronavirus hit, said the average American has $400 in their savings account. So imagine coming into the coronavirus without having a savings account to adapt for your mortgage at least 1 month, or a car payment. $400, we all know when an emergency happens with your car or something like that, it's not going to really take you very far, right? So financial wellness is to focus on being prepared, getting to that spot to where you can be more financially well and financially free from things that may happen that are unexpected, right? Life throws a lot of stuff at you, and it's tough to be prepared financially to those unexpected expenses. So out of this educational sessions that we do, understanding your credit score is the one you see in the top right that we're doing today. So we have a lot of different presentations. I think we even did protecting your identity was the last one that we did with you guys, which was awesome. So glad. That was a great session we had where we brought on some partners from ID Shield to come talk to you guys about, tips and tricks, how to protect yourself from fraud, because it is rampant right now with the coronavirus out there. So we like this slide just because it's, explaining what financial wellness is. We don't want to get lost in banking terms without explaining what they are. So this is the agenda, what we're going to talk about. What is your credit score? Why does it matter? How do you find out what your credit score is? How to maximize or rebuild your credit score? And then borrowing for a one-time need or ongoing needs. So with that, I'm going to hand it off to Oscar to take this.
Perfect. Thank you. One thing I wanted to mention to you guys is you're going to hear that word, obviously, financial wellness throughout. So what I want you guys to understand is financial wellness is going to be different for each and every one of you. And that's what I love about KeyBank, that regardless of what stage in life your finances are in, we can help. So in this particular case, we're talking about credit. So if you're someone who's looking to build credit or someone who's looking to rebuild it, right? If you've had some hiccups along the way, KeyBank can help. But as far as, rates are super low with mortgages. If you're looking to buy a home, we can help. Looking to refinance a home, a car, motorcycle, whatever the case is, we can help. So just think about that when you're, hearing the term financial wellness. It's going to be a little different for each and every one of you. So that's what we're here to do. That's what KeyBank is all about. We strive on customer service. So I just thought I'd throw that out there. When you hear financial wellness, you're going to be able to apply that in your particular personal situation. But credit scores, they range from 300 here to 850. The average score is about 700. So just real quick to keep the engagement going, do you guys know, out of a raise of hands, you don't have to say, but do you guys know what your score is, or when's the last time you checked your score?
When's the last time you checked your score, Melanie? Last week. Last week we got one. How about you?
Awesome.
Haven't checked it. The last time I checked it is because I had to give it to a potential landlord, and that was first and last for me.
Perfect. Awesome. So it's obviously important. That way you know where you're at, where you stand. One of the biggest things is it's free out there with all these apps and the Androids and smartphones. You can download Credit Karma. That one might be nice to have because it gives you an idea of where you're at. It's not 100% accurate. You can kind of see where you're at in regards to like a score. And we're going to get into actual credit report and the score, what's the difference and things like that. But it definitely is very, very important to know what your score is. This is going to basically identify the rates that you might get on car loans. And the biggest one is home loans. So when you're talking about a large amount that you're financing and a long-term plan, a rate discount or possibly, a lower rate can help you save tons and tons of money. Since we're on the topic, if you bank with us, meaning you have a checking account, you save with us, meaning a savings account, and you borrow or lend from us, you automatically get relationship pricing. So if we stay on that concept of buying a home, rates are all-time lows. KeyBank will give you 0.25 off of that rate as well, just for being a KeyBank client and being part of this Key at Work program. So we can definitely help you out in that regard as well. Even for car loans and truck loans, we can help you get rate discounts as well. So a lot of great benefits by being part of this program. But yeah, 300 to 850. Another quick question for you guys. If someone does not have credit, do they have a credit score?
I have no idea. I don't think anyone here knows.
Sometimes people are completely off, don't show up, really.
What do you mean? Like if they don't have
Like
credit?
if they've never borrowed any money or had anything.
I have, I think I got credit. I just paid a loan back. My credit
So
cards.
I can rephrase the question. Can someone have a 0 credit score?
No.
No, we're gonna go with no.
I think you can.
So the answer is yes.
Okay.
So if someone has absolutely no credit, like an 18-year-old, their score could be a possibly 0.
Wow.
And that's where it begins when you start applying, when you co-sign, things like that. So yeah, thank you for participating. Yeah, we're ready for the next slide there, Micah. Perfect. So we talked a little bit about an actual score, what a number is, and now we're going to talk a little bit about obviously why it matters. We mentioned the high interest rates. Even when you're, applying for, to rent an apartment complex, a lot of them are really digging down on the credit scores. If it's low, they kind of want to know, why is it low? Are you someone that's potentially trustworthy? Are you someone that's going to be able to pay on time? And then this is, how do I find what my score is? So a couple of resources here. Down there, it specifically says, although it does not include your credit score, it's a good idea to visit annualcreditreport.com. So this is something that you can get absolutely free once a year. And if you haven't done it, I'd highly recommend to do it. Coming from retail, you'd be surprised how many horror stories is that they've never checked their actual credit report. And we're running just a simple credit card application, and they say, yeah, my score is 750. I always pay everything on time. And we run the app, and guess what? It's in the 500s, 600s. And the reason that is this is another way to uncover fraud. So if there's things that are out there under your name that you're not aware of, the fraudsters are not going to make that payment for you, right? They're not going to make the on-time payment. So there's tons of stuff that you can find on your actual credit report, and it's definitely important to have. So, just jot this down, annualcreditreport.com. It's free for you once a year. If you haven't done it this year, this is something that you can have on your to-do list, and run through the report. If you need help with that, visit our branches, visit our banker on the line to go through it and make sure that it looks good. If you have any questions, reach out. But this is one of the biggest pieces, is to understand, number one, what your score is and what is being reported. And I'll hand this off to Micah here. He's going to take over this portion of the presentation. And I love how this pie chart really, really breaks it down. So this is some really good information for you guys. Go ahead, take it away, Micah.
Awesome. No, thanks so much, Oscar. Yeah, so guys, I don't know about you guys, but I'm very visual. I'm a very visual learner. I have to kind of see things. I can't just kind of read it and get it in my head. So I think these next couple slides are very impactful about what actually makes up your credit score. We've talked about how low your credit score can go at 300 all the way up to 850, right? But what goes into your credit score? What makes up this score that is so detrimental to us getting better rates for homes, car loans, etc., right? So it is a very thought out process of what makes up your credit score, and these are the exact percentages of what creates your credit score. So obviously payment history, this is what we call score killers if you are not paying things on time, or payment history with things that are delinquent. So when we're talking about payment history, it is the largest you can see in the pie chart of what goes into your credit score. So 35%. So if your current debt is good, length of credit history is good, credit type's good, credit inquiries are low, and all that. So you have the rest of the pie chart that you've done well on. If you are missing payments, you're delinquent, and just not paying your bills on time, you could have a very bad credit score. So this is a very important thing that you can do day one. I love how Oscar says, financial wellness and the change today, it starts right now. So if you're struggling to create, a better credit score, which a lot of people are, the first thing that we tell people to do is start making your payment history on time. Even if it's the minimum balance, try the best job that you can to make those payments on time. Credit card payments, we always recommend, if you are in credit card debt, to always make above and beyond the minimum balance to pay off that debt as fast as possible. However, some people say, I'm in a spot where I can only afford to pay the minimum balance. Well, to maintain your credit score and don't diminish it, at least make sure you're paying the minimum balance on all of your payment history, or for credit cards, your car, your mortgage, etc. Seems kind of like a no-brainer, but payment history, it's just something we want to bring to your attention, that it is the most highly weighted when we talk about what goes into your credit score. So, and when we do what we call a hard pull of your credit, and we see your full credit report, if you're applying for a mortgage or a home equity line of credit, we look at those credit reports, and if it is a poor score, we can see, delinquency of a student loan, past 90 days, or car loan, past 90 days delinquent. So when a bank's looking at this, trying to give you a loan, as you can imagine, it's probably not going to be a good indicator that we're going to get our money back. So this is how the banks definitely try to have an understanding of somebody's percentage or ability to be able to pay back a debt. So payment history makes sense that it's the largest part of the pie chart. So moving on to current debt and credit utilization. This is a real important one. A lot of people may have high income. So that I was a banker in Cherry Creek in Colorado, the wealthiest part of the state. And you wouldn't believe how some people would have terrible credit scores, but they were making $250,000 or $300,000 a year, just due to their credit utilization was all off. They were maxing out credit cards. They had maxed out home equities. Every single line of credit or or loan they had was just maxed out. So you're thinking to yourself, well, why is my credit bad? I pay my bills on time. I do everything that I can. I don't have a ton of credit inquiries. If you have a credit card, let's say it has $1,000 limit, and you have more than $300 on that $1,000 credit card, that's going to diminish your credit score. Credit utilization is a big part of being able to maintain a high credit score. So we like to see that you're not spread too thin when we're pulling your credit score to see, oh, they have, four, $10,000 credit cards, but then we look at the credit report when you do your application, and we see that all of your credit cards are maxed out. That's not a good thing that we want to see when we're looking at credit reports. So, having a low balance on revolving debt, such as credit cards, is key to this section in your score. Only by using 30% or less of your available credit, you can help boost your credit score immediately. For example, like I said, the $1,000 and the 300. If you're looking to rebuild your credit card or rebuild your credit, this is a really great way, again, to start today. Have a goal. Make a goal for yourself. That's what I recommend. That's where you're going to create change. Is, hey, I want to improve my credit score. I'm going to start paying my bills on time, and I'm also going to try to get all of my credit cards or credit products down to 30% or less, so my credit score can go up. That's a great goal to set for yourself if you're trying to create a better credit score for yourself. So moving right along, length of credit history. You can see this is a smaller part of your credit score, 15%. The average length of time since you first opened a credit account. Long, good standing credit accounts help boost your credit score. And if you close those good standing credit lines that you've had for a long time, it can definitely hurt your score. I'll share this a little bit about my personal journey. I like sharing a lot about my personal journey in finances. There was a bank that I was banking with. They kind of upset me. I had this credit card for about 6 or 7 years, so quite a long time. And they upset me with some service issues. And I said, you know what? I don't want to deal with you guys anymore. This is bad customer service. I want you to close out this credit card. Well, to my disbelief, I looked at my FICO score about a couple of weeks later after the credit card was closed, and it dropped about 20 points. And I was disheveled, like, what happened to my credit score? Why did it drop 20 points? It was because the length of the credit history, I had closed that out. So that can definitely diminish your score. I mean, 20 points is something you can work back towards. It's not a big deal, but still, I've seen them higher if it's a longer line of credit history that gets closed out. Just keep that in mind if you are going to close out a credit card you've had for a long time, especially before you're trying to have a big home purchase or something like that. You don't want to diminish your score too much before you have an application. So just to give you an idea. So moving on to credit inquiries. So credit inquiries are kind of unique in the sense that the number of times a lender has accessed your credit report because you've applied for credit or a loan. Inquiries can stay on your report for up to 25 months. Can you believe that? Over 2 years, they can stay on your credit report. So it's really important to stop and think before you're applying for something with your credit, because it can diminish it. 10% of the credit score, the least amount. So credit inquiries are important, though. I'll give you a great example that me and Oscar always talk about. When you are about to, let's say you're going to buy a car and you go to a credit or a car dealership, right? They are going to pull your credit score multiple times to try to get you the best rate. So it's almost like a bidding war. They put your information in, they make you sign a little waiver. Yes, you can pull my credit. Well, several banks are going to do what we call a hard credit pull, and it is going to diminish your score greatly. So something that we try to encourage people to do if you're going to buy a car is get a pre-approval somewhere else. Like, let's say you came to KeyBank and you did all of our loan process for a car. We give you a pre-approval letter saying, hey, we reviewed it. This is the rate and the amount that we've approved you for. You have that buying power when you go into a dealership to say, hey, I don't need you. I'm pre-approved for $25,000 to buy a car from my bank. I don't want anyone to pull my credit. And at that point, they're going to start working for you to try to get your business. Because when you go to those dealerships and they pull your credit 7, 8 times, it could really hurt your credit score. You'd be shocked to see 40, 50 points off of your credit score for just going and buying a stinking car. So you want to be careful with those credit inquiries. Normally, a single credit hard pull could be anywhere. Oscar, you correct me if I'm wrong. I've seen them anywhere from like 4 to 7 points. Normally they're pretty low whenever there's a hard pull, but it can be pretty high per credit inquiry. Does that sound about right, Oscar?
Yeah, that sounds about right. And then the only other thing that I was going to piggyback on is, so imagine you go to KeyBank, you get it pre-approved. When you go to the dealer, it's like walking in there with $25,000 cash because you already have it approved. So now you have the buying power and you have the leverage, not the salesman, right? And now you have the leverage to negotiate, negotiate them down because you have the cash in hand. So it's a very, very good strategy to have, and a lot of people don't know that that's basically the best way to do it. So definitely a good tip there from Micah. So yeah, just keep that in mind if you're in the market of buying a car, buying a truck, even a motorcycle, whatever the case might be. We can help you get that ball going.
Yeah, and it's just when we talk about credit inquiries, we've just heard horror stories. I know Oscar and myself from people that go into dealerships, and I mean, Belco bid on it, 30 credit unions, and it's just like, whoa, I wanted you to give me the best rate, but the amount of inquiries you can get on your credit score is astounding. So just a tip there to be careful when you're talking about your credit score. Don't want it to be diminished too much. And then finally, types of credit. I'm not going to go too far into this one. This is 10% of what makes up your credit score. Installment loans, revolving line of credit. There's all different types of loan products we're going to talk about a little bit at the end of this presentation. But that also goes into improving your credit score. If you just have one type of credit product, you're probably not going to be able to go all the way to an 850 just because that is 10% of your score. So you might only have a lower portion for what makes up your credit score for types of credit. But with that, I'm going to hand this back to Oscar. But again, if you guys have any questions, this is a good stopping point. Does anybody have any questions?
No.
I just wanted to say, it just seems kind of silly that they knock your credit every time someone wants to look at your score.
Yeah.
Yeah.
Well, not just to look at it.
Fair.
It's a hard pull when you're gonna, like, I call it pull a trigger. Like, yes, I want to apply for a credit card. Yes, I want to buy a house. Yes, I want to apply for a loan or line of credit. So that's a decision that you have to make consciously, saying, if I do this, my score is going to be impacted. Not necessarily like a soft pull where they just looking at what it could be, like Credit Karma. You can go into the bank and say, hey, my score's a 700 on Credit Karma. What's my rate looking like for this? Does that make sense? And then now you get in that category. So it's not a pull, or your score does not get hurt by somebody looking at it. It's an actual hard pull, is what Micah was saying. But that's an awesome question, and I'm glad I can clarify that for you.
Yeah.
Yeah, soft pulls, like there are examples for soft pulls of credit where it does not diminish your credit score that financial institutions can do. And then there are hard pulls. So it just depends, and definitely ask, if you're going to apply, say, hey, is this a hard or soft pull on my credit? And they'll be able to clarify and tell you that. But yeah, it is quite a bit that you can lose from it. And it is shocking because you got to think from the bank standpoint of view. If we're going to give you $400,000 for a house, you bet your bottom dollar we're going to take a look at everything on your credit score and make sure we'll be able to get our investment and our money back. Obviously for lending that type of money out, it's just checks and balances. But it can be pretty diminishing of your credit score. But If you have any other questions, you guys feel free to stop us or type something in the chat. We're more than happy to stop. But with that, I'll hand it back to Oscar for credit options.
Sure, thank you. Yeah, we love questions. We love, participation. Just like we mentioned at the beginning of the call is, we are the professionals here that you guys got the bank brought directly to you, to your front doors, to your screens. So just use us. If you have anything that pops up, don't be afraid to ask. There is no silly questions. We've all been there where we have over 20 years, 30 years of experience here in front of you. And we didn't, learn this overnight. So definitely leverage that. So now that you understand what your score is, now you know where to find your score, you can kind of have an understanding of how you're going to use it. And there's a couple of things that you want to ask yourself when you're thinking of borrowing money. So one of the things is, do you need the money instantly, like right now, to pay something off, or do you need access to it today? Or is this something that you might want to have in case an emergency happens, you have peace of mind that you have access to the money? So what I'm talking about is two different things. One is going to be a line of credit or overdraft protection line where it's just available, right? If you don't use it, you don't pay anything back. It's just there. It's a revolving line of credit. Say it's $1,000, you're going to go buy some gardening stuff. You use the line of credit. Now you owe 500 and then you pay that back. Once you pay that back, your line goes back up to 1,000 again. So you can borrow money, pay back, borrow money, pay back. One of the biggest things to know and understand, though, is if the feds raise the rates, your rate's going to go up on the line. And if you owe money, your minimum payment is also going to go up. So that's what a line of credit is, or a revolving line. It's open-ended, basically. And then the one here in the middle is you're going to ask yourself, do you need a fixed payment? So one of the most common ones is like a car loan. So you're going to, for example, finance $25,000. Your payment is $400 a month, and it's for 5 years. So everything is fixed, and then your rates say 5%. So the terms of the fixed rate loan are not going to change. You can pay it off quicker, but your payment's always the same. Your rate's always going to be the same. So those are some of the things that you want to ask yourself when you're considering borrowing money. And then this last one is, if you're somebody who's young and wants to get started with credit, there's two main ways that you can do that. One of the main ways is if you have, someone that's very supportive, like a mom or dad, a cousin, uncle, someone that you're really tight with, they can probably co-sign for you. So they're going to be number one and you're going to be number two. So technically you're using kind of their credit to get yours going. I started mine a very long time ago with my older brother at Circuit City. If you guys know what Circuit City was. So we got a big screen TV, he co-signed for me and I made the payments, and that's how I got my credit started. If you're someone who's more independent and does not want to ask anybody, wants to do it on your own, we have a secured credit card. If you guys don't know how that works, I can run through it real quick. Basically, it's a savings account. The minimum you deposit $300 into that savings account, and the $300 gets locked. You cannot touch that money. And then in the mail, you're going to get a credit card, and that's your limit for the credit card. My recommendation is just use it for gas and groceries. It's things that you're going to already use. So anytime you're going to go gas, groceries, or go get fast food, you know what I mean? You swipe that card, and at the end of the month, you're going to get a statement showing your transactions and what you owe. Just go to the bank or online banking and make the payment back. So you do that cycle for roughly, 6 months, 8 months to a year, your credit's going to shoot up. And then at that point, you can actually apply for actual credit card with the bank. The cool thing about this program is once you're done with it, you can go to KeyBank, close the savings account, close the line of credit, and you get your $300 back. So you never really lose the money, but it's secured by the $300. What that means is, for whatever reason, if you don't pay, the bank already has the money. Does that make sense? Perfect. Any questions around that? Awesome. Now, the next one is borrowing for a one-time need. So this is what we call something that's going to be fixed. So it's a set term. So what that means is once you pay back the term, it closes. So you kind of structure it. You have everything in place, just like it says here, a vehicle loan. You borrow the money. Once you pay it off, then the account gets closed and you get your title in the mail. For you homeowners out there, there's a home equity loan where you can borrow against the equity of your home. Unsecured home improvement, those we normally use for home improvement loans. Unsecured personal loans, so let's just say, you know, you need something quick to pay off something, you need quick money to, you know, pay the rent, whatever the case is. There's no collateral that's needed. You get the money instantly and it gets funded to your account and you can use it for whatever you want, and then you just start making payments back on it. So these are just some of the examples of just a kind of like a one-time need. You know what you're going to use it for specifically, and once it's paid off, it basically closes. Go ahead and click the next one for me, Micah. And this is going to be borrowing for ongoing needs. If you're very disciplined, I love some of these products that KeyBank offers. I have a few of them myself. I have a couple of houses that I rent, and I leverage the equity on them to continue to get more houses. So that's one of the strategies that I learned, you know, a long time ago. I'll be 37 this year. I bought my first home at 25, and I got into real estate very young. So I told myself, when I get to 7 houses, I can retire. So in 10 years, I have 3. So, and I'll be 37. So the plan is when I'm 47, I'll have 6. And then however long it takes me to get the next one, I can quote unquote retire if I choose so. So imagine, you know, coming in, you know, the first of the month, I get 7,000 deposited into my account. And then February 1st, another 7,000. And it just keeps going. So that's kind of my strategy on using equity from my current homes to continue to grow, you know, kind of more homes basically. So as far as lines of credits, we talked a little bit about it. The main ones are personal lines of credits where you can use for overdraft protection. We have low interest credit cards. Our credit cards that we offer, by the way, don't have any annual fees. So if some of you on the call might have credit cards, you're probably paying an annual fee. Most banks do have that. So ours are completely free. We have a rewards credit card. We have a cashback credit card. So again, if you're someone who's really, really disciplined, I had one of my clients when I was in retail, he would pay everything on his 2% cashback credit card, meaning his mortgage, car loans, insurance, water bill, electricity bill, everything on the 2% cashback credit card. So what I mean by discipline is at the end of the month, imagine how much his bill was, right? $4,000 or $5,000 because he put everything on it. So he paid it and he would get 2% cash back on that. So it's expenses we're already going to do. But what I mean by discipline is if you see that $5,000 bill, it's very easy to say, well, I'll just pay $4,000. And then you have $1,000 left over for the next month, which you're going to be paying interest on. So these are just some of the ones that are open-ended. So you can borrow money, pay back, borrow money, pay back. I think the biggest takeaway is just understand that if rates go up, then your payment goes up and your rate goes up as there. But if it goes down, same thing, your rate will go down and your payment will go down. So this is just some of the other tools and resources that you have. So it's just really understanding what it is you need the money for, and what you're going to do with it. So this is more of peace of mind of that you have an emergency, you have, you know, kind of a bucket where you can get money from to get you out of that emergency. And then once you pay it back, it's going to be available for you for next time. Same thing kind of with my examples with the mortgages that I have. I had an $80,000 home equity line of credit that I owed on. I slowly paid that down and I used that same 80,000 to get the next one. Does that make sense? So it's just continuing using the same money that's revolving for you. Any questions around revolving lines of credits? All right. And then back to you, Micah. Go ahead and knock this one out.
Awesome. Awesome, guys. You know, something that question we get a lot is people say, you know, how can I improve my credit score? I'll share another story about myself. Ex-girlfriend I had put some of her college books on a credit card and kind of went delinquent on me. the things we do for love, especially in our 20s, right? So so we all make mistakes. Learn from. I'm 33 now, so luckily I've learned from those mistakes. Married, have a 1-year-old daughter, but from that, a secured credit card. I want to mention that again. What Oscar had talked about. This is the fastest way to get your credit score in a good position. If you have a 350, 400 credit score and you're like, gosh, I'm not getting approved for anything. How do I get my credit score up? It's just killing me. Get $300, do the secured credit card. I've seen credit scores go up 40 points within a 6-month period for using a secured credit card. So $300, gas, groceries, pay it off every month. You're not paying any interest. And then you'll see your credit score go up within a 6-month period. This is how we help people, rubber meets the road, so to speak, with real solutions to help you get your credit score where it needs to be. So just wanted to harp on that, how important that is, because we get a lot of questions on, hey, kind of struggling with my credit score. How do I get it up as fast as possible? Secured credit card is going to be the answer for anyone, anywhere. Some banks don't offer that product. We do at Key. So just wanted to bring that up again. But guys, it's good to know where you stand. And that's kind of where Stephanie comes in. Our financial wellness reviews, we do here at KeyBank, are a living, breathing document. So if you came into a KeyBank, we're going to go through how much you make, how much you owe, all sorts of questions to kind of come up together with a game plan of kind of knowing where you stand. We all know that peace of mind is really important with a lot of different things in life, but especially with our finances, having peace of mind to know, okay, I have a good plan. I know where I'm going, and I know what I need to do to get there can be really important. So we want to offer that to you guys. If you guys, like I said, the average American has $400 in their savings account. Most people don't have budgeting plans. We offer a budgeting plan called 50-30-20 here at KeyBank. We recommend 50% of your finances should be going towards needs every single month. So 50% goes towards mortgage, gas, groceries. 30% should be going towards wants. So if it's something you want to treat yourself, go to Amazon, get yourself something nice, a nice pair of shoes, do that. And then 20% of your funds every month should be going towards savings, extra retirement, paying extra down on debt. So that's our 50-30-20 plan in a nutshell. Obviously, there's a lot more details we could give on that, but just again, these are solutions when we talk about that we can give you here at KeyBank to make sure that you're taken care of and you have a plan. How's retirement looking? Are you guys looking to make sure that you guys have a good solid plan for retirement? We've all been there with Target or Walmart, and we're there, and we see somebody who's bagging groceries who's 65 or 70 years old. We don't want to be in that spot, right? We want to be able to retire at an age where we can enjoy our family and enjoy our life. So these are hard questions we have to ask ourselves, but we it's something that it's never too late to start, right? So just want to throw that out there, that we want to be able to help you, that you're not alone in this. It's definitely something that we all hear the saying, it takes a village. Well, it takes a village to kind of be financially well as well. When you look at LeBron James or some celebrity, they have a team of people that deal with their social media or their finances or their whatever. Think of us as a team to help you guys with your finances. Just don't have to go that road alone. And I'm don't mean to get all folksy on you here, but it's true. It feels good to not have to go through those things by yourself. So have peace of mind, know where you stand. Stephanie's information is in the chat, her email, phone number, everything. If you needed to contact her and just get some more information to see if it's something we could help you out with. But again, these are some of the tools that we help out with. I said, like setting a budget, our 50-30-20 plan, managing expenses, understanding other products better. Our financial wellness review does that. Again, so if any of you are interested with banking with us at Key, we do offer a $250 promotion if you guys open up a checking account and set up your direct deposit. It's that simple. We recommend the Smart Checking. It's a fee-free checking, no minimum balance, no fees, period. It's just a totally free account that we can offer you guys. And again, we couldn't use $250 right now. Something that we also offer here at Key that I wanted to touch on was our program Easy Up. Every time you swipe your debit card, it takes $1 and puts it into your savings account. So if you go to Target, you swipe $1 in your savings account. Go to Walmart, swipe one, get gas, same thing. So you could save $3-4 in a day. Doesn't sound like a lot, but it's a really easy way to save without thinking about it. And before you know it, in a couple months, you're like, oh, I got $200 in my savings account. That's great. So these again are the products we have at Key to really try to help you be financially well. That's our goal here. So as you can see, this is where we stack up with the competitors for where we stand with KeyBank. Our Easy Up program I just explained, Allpoint, Allpoint ATM, largest ATM network in the world. We've partnered with to where you can get your money without getting any fees. Really important. So who wants to get fees at every single ATM? Not me. That's fine if you want to give your money away to get it out. I always thought that was a ludicrous thing to think. You're gonna charge me $5 to get me my money? Like, wait a minute, what's going on? So this is where we stack up against the competition. Really like that we can go toe to toe with the largest banks in the nation, because we are one of the largest banks in the nation. But with that, if you need to, write down our information. If you have any questions or concerns, email us. Me and Oscar are more than happy to answer any questions you guys have about our presentations, about maybe future presentations you may want, but just also banking questions. We're more than happy to answer or direct you to Stephanie to be able to help you. We're here to help. Proud to be a part of Colorado and the KeyBank team in Colorado to be able to help you guys. But with that, I'm going to hand it back to Oscar if he has anything to wrap us up with.
Sure. Yeah, very well said. The two things that I wanted to highlight on those last couple of slides there is, I'm pretty sure most of you already have, a bank, and that's fine. One thing that I always ask is, when's the last time you took a really good look at your statement? So I'm pretty sure that you might find a fee here or there, and that's your hard-earned money that's being taken out. So it could be like a maintenance fee, a low balance fee, minimum balance not met fee, some type of debit card fee. I know there's fees out there, and that's one of the biggest things that I'm very proud of with KeyBank. We're very transparent, and the accounts, by being part of the Key at Work program, you will not see any fees. I always say, if you ever see a fee, contact me. I'll waive the fee for you and figure out what happened or why it happened so it doesn't happen again. That's one of the first things that I wanted to mention. The second thing is those of you that have bank accounts, when's the last time you got a call from your bank just to see how your finances are doing? Or not even a call. When's the last time you got a call from your personal banker, right? Probably not. We strive on customer service. If you become a client of ours, there's a 30, 60, 90-day plan in place to make sure you got your debit card, make sure you got your direct deposit set up. And then the third one, which I love the most, is to call you and say, hey, by the way, the $250 is in your account. So we are very client engaged. We're known as a small community bank, but as you can see, we can hang with the big guys because of our customer service and everything we can offer. As far as the incentive, you get $250 for enrolling with us with direct deposit. Super, super easy. As far as the Easy Up goes, once you get to $25 in the Easy Up program in your savings, guess what? KeyBank is going to match that 25. So we're going to throw another 25 in your savings for you. So right there, you're at 300. And another cool thing that we have is called Refer a Friend. So if you're a KeyBank client and loves KeyBank and all the benefits that you have with us, you can send a link to a friend or family member, and you get $50 for referring them, and they get $50 for enrolling, up to $500. So if you add up all those incentives, that's an incentive of up to $800 by being new to KeyBank. So that's a lot of money. And when I started the conversation at the beginning of the call, when I was talking about making the change and they start today, this is a great way to start that relationship on the right foot and on the right track to financial wellness. So I definitely want to thank you guys again. If you have anything for me, for Micah, for our team member that's on the line, which I'll hand it off to her in case she has any other finishing touches. Again, we're very passionate about what we do. We really thank you guys for the time. And if we can impact just one of you, it's going to make our day. So thank you again for the time.
We had a question. So Malaya wanted to know, she has 3 credit cards, right, Malaya? And she was wondering if that is good for her credit. Right.
So that's a great question. And Michael, we can tag team it together, but it's all going to depend on, you're just talking about 3 credit cards. So we don't know if you have car loans. We don't know if you have lines of credits, personal lines. We don't know what your debt to income is. And the other thing too, and we don't have to disclose it. That's why we don't want to, we don't have to talk about it, but it's also how much do you owe on each credit card? If you have 3 that are 5,000 each and they're all maxed out, that's going to hurt it. If you have 3 and they're very low usage, that could definitely help it. The banks, just so you guys know, are going to assume that whatever you have in regards to debt, you're going to max it out at any time. So just understand that as well. And that's definitely a great question. What I would recommend in this case is contacting our partner on the line, and she can kind of go through your personal finances with you. And what she uncovers is we can make recommendations off of that. If you are drowning in debt, we have a debt consolidation loans. So instead of making 1, 2, 3, 4, 5 different payments with 5 different interest rates, we can consolidate all that into one, with it's going to be a lower rate and a lower payment. And now you can focus on getting out of debt. Anything else you wanted to add, Micah?
Yeah, no, I mean, yeah, that's exactly it. Like I said, we that's your personal information. I'm glad you asked that question. If you want to dive more in depth, I recommend you talk with Stephanie about it. But to answer your question just at a glance, it can definitely help your credit score if you're under 30% usage for each one of those credit cards. Absolutely can help your score. I have seen, and to give you a point value of how much it can help your credit score, if you're under that 30% usage on each credit card, think about 20 points per card. So if, let's say, something bad happened and you had to max out all of those cards and you were over 30% on each one of those cards, your score could go down like 60 points. If you maxed it out, you could see that the 60 points go down in that FICO score within 2 quarters of a year, maybe 3 quarters of a year. So definitely want to always try to keep those minimum balances low if possible on your credit cards, because they can come back. The average American's in debt $10,000 in credit card debt. So very, very average number, just to throw it out there. But yeah, I hope that answers your question.
And so you mean as long as you're below 30% of the limit?
30% of the limit, yes.
Okay.
30% of the limit. Try to stay below that.
Okay. Thank you.
Great question. Wonderful question. Any others? And it is a safe space, you guys. Like I said, I shared some of my information of my personal journey. So don't feel shy. If you have any questions, I've probably been there.
Malaya is hoping to get a car soon. Whoop, whoop.
Yay! Wonderful.
Let's just revisit really quickly. If she wants to make sure her credit is good before she goes to a car dealership, could you revisit how you would recommend her to check her credit before that, or yeah?
Sure. So as we mentioned, creditreport.com is a free, it's a government website. So it's totally a free once a year. You can get a total credit report to make sure everything on your credit report is legitimate and non-fraudulent. Okay. So that's the first step. I recommend doing that because it's free, it's easy, and you get one per year. Now, if you're going to actually check your credit score, because when you check the creditreport.com, it's just going to give you a credit report. It's not necessarily going to give you a credit score of where you're at right now. Okay. So there are multiple different websites you can go to. Even if you said you had some credit cards, some of the credit card apps can give you a FICO score on the app of what your FICO score is. So for instance, like Capital One, even KeyBank, you can, if you have a KeyBank credit card, you can look on the app and see what your FICO credit score is. So I would start there. So because there is Credit Karma, there's all those credit.com places, but normally there can be a fee sometimes with those if you're going to try to find your credit score. So I recommend, since you have credit cards, they might be giving you that for free if you have an app or an online portal you can log into. I know with Capital One and other banks, you can definitely find your FICO score there before you go and buy. I don't know if that answers or helps.
Do you mind if I throw in something there?
Sure.
Always keep in mind too that we could always get you pre-approved before
Yeah.
you go to the car dealership.
Absolutely. Absolutely. Yeah. As we mentioned with our scenario a couple times we were talking about, highly recommend you get pre-approved before going to the dealership. Because like I said, they're going to pull your score multiple times and that credit score could get damaged pretty bad. So yeah, we highly recommend you get that pre-approval letter before you go in.
Okay. I got one question, but like,
You forgot your question?
I have
Got
one,
more.
Oh, you got more questions?
but I will wait.
We're going to generate more questions. I know Ty had one that looked really interesting, and we'll generate more questions while you answer that one.
Yeah, there's one in the chat. It says, even though there's a freeze on student loan payments right now due to COVID, is it better for one's credit to keep making payments?
Wow, that's good.
Yeah, so that's an awesome question. And again, we can tackle it together, Micah. My 2 cents on this is with COVID happening, there's a lot of, stuff that's being forgiven right now. I'm sure you guys heard of the forbearance through homes where they were allowing you to skip up to 3 payments worth of mortgage payments, similar to vehicle loans. And I'm not too familiar with student loans. I don't have any myself, but I think it's very similar to student loans. My 2 cents on this is if you can continue to make the payments, because this is debt that still has to be taken care of. Just like the mortgage, some people were skipping 3 payments and either they had to pay the entire amount back in one lump sum or they would apply toward the end of the loan. Same thing with car loans. So my 2 cents is if you have the ability to make the payments, I would continue to make those payments and get rid of that debt as quickly as possible instead of kind of piling it on, or I'll do it later, because then you're going to get in the habit of, even a credit card, you're going to make the minimum payment and that lingering 3,000 is going to be there for 3, 4, 5 years. So I always say the less debt you have, the better off you're going to be financially. So my 2 cents is if you have the ability to pay, not just on your student loans, but anything in general, pay it. Micah?
Yeah, exactly what Oscar said. I would recommend to pay it. I'm in the same scenario. I have some student loan debt and it is in the forbearance period and I'm still making my payments. Something that it's going to also help you out with is your DTI, which we had mentioned, debt to income ratio. Student loans go into those DTIs and the more you pay down, the better. So everything that if you weren't paying it down, that debt is not going down for what you're making. If that makes sense. So I would say pay it just for the sake of getting your DTI better. But that's just our 2 cents. Awesome question. Great question. Any others?
We just want to confirm over here that Malaya typically gets her credit score checked at Experian, but annualcreditreport.com will give you Experian, like output the Experian plus two others, right? Or something
Right.
like that?
Correct. So yeah, so a great question. So does everyone know that there's 3 credit bureaus? Experian is one of them. TransUnion. Does anyone know the third? There's 3 main credit bureaus.
Equifax.
Hey, ding, 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 ding,
Woo!
ding. Good job. So those are the 3 main credit bureaus that all financial institutions use when they're pulling their credit score. Your score might be 750 on Experian, but something different on TransUnion. But normally banks or financial institutions kind of have one place that they pull from. Oscar, we pull from Experian, I believe. Yeah. So whatever the Experian score is, that's where KeyBank pulls from in most financial institutions. So yeah. So when you do the creditreport.com, a credit report is going to show what you've applied for credit. So it might be car loan, this amount. It might be a mortgage, this amount. It may not give you the credit score. It'll just give you what's on your credit report that you have applied for. And the reason why we recommend you look at that at least once a year is fraud. We want to make sure that you're like, yes, my car's on there. Yes, my mortgage is on there. But if you see something like, oh, there's an RV on here, I don't have an RV, that is a sign of fraud. That's why we recommend you look at that credit report once a year. Again, Experian, if you use Experian, fantastic. That's a great resource to look at kind of an idea of what your score is. Very
Thank you.
accurate. Yeah, great question.
Wonderful. Yeah. Any other questions from the crew?
Very helpful.
Yeah.
Yeah, this is awesome engagement. Thank you guys.
Yeah, you guys are rock stars, first of all, for knowing all the 3 credit bureaus. Most people don't know that. So congratulations. Pat yourself on the back. That's good to know. Something it looks like we don't have any questions, but something I want to give you guys is what we call a best practice, something you should implement. There is an option if you're super protective like I am. You have the ability to freeze your credit score or freeze your ability to apply for credit through all 3 main credit bureaus. Now, I know a lot of customers that do this since fraud is so rampant. You can go to Experian, TransUnion, Equifax, and you can freeze your credit score to where no credit inquiries will go through. So if somebody applies for something, it's going to be automatically declined. Even if you apply for something and it's legitimate and you didn't unfreeze it, it's going to be declined immediately. So what it is, it's kind of putting a bike lock on your credit score to where nobody can access it. Now, if you want to go buy a car or you want to go apply for a credit card, unfortunately, you have to know where the credit score is being pulled, like Equifax or TransUnion or Experian in this case, KeyBank. Let's say you're going to KeyBank. You call Experian, say, hey, I want to unfreeze my credit score. They'll unfreeze it. You apply for the product. Once it's done, you freeze it again. You call them up and freeze it. A lot of people use that as a best practice. Now, there is a fee involved with that. I think it's like a $5 to $8 fee if you're going to freeze it every time you freeze it or unfreeze it. Some people say, hey, it's worth it. I know that nothing's going to come on my credit score, and anything that was applied for fraudulently, I know is not going to be accepted. Does that make sense? So just a best practice that some people use, and I want to give you guys as many tools as possible to protect yourself from fraud. I think it's very valuable. I think it's worth the money to pay a $5 fee here or there to make sure your credit score is frozen and no one can access it for any sort of, fraudulent activity. So again, peace of mind, right? Can't put a price on it.
Yeah, my credit score has been frozen at all 3 for a couple of years now. I think all but one day when I had to unfreeze it to get a new credit card. And you're right, peace of mind.
Yeah, it's great. That's awesome. Yeah, great best practice that we like to say in the banking industry to, something that we all should practice because it protects yourself. So love it. Awesome. Well, I think that's it.
Well, thank you guys.
Thank you.
You're welcome.
This was
Awesome.
wonderful. We really, really appreciate you doing this. And I mean, I certainly learned a ton. I know everyone here in this room, while we were muted, we were just making, oh. So very helpful. Thank you so
No.
much.
No, I'm so glad. Thank you guys. Me and Oscar and Stephanie, we thank you guys for your time, and we love the engagement. What an awesome group today. Again, feel free. Our personal information's on here. If you want to contact us, we're here to help you guys.
Great. Thank you guys so much. We appreciate it.
Enjoy the day. Bye, guys.
Bye-bye.
Thanks. Bye.